We're going to talk about Taiwan Semiconductor and how I think it's the number one most important company in the world. Why do I say that? Because everything is run off of microchips. We have NVIDIA powering the AI revolution. However, they outsource their chips to Taiwan Semiconductor, along with Apple, along with Samsung, along with many of the tech companies out there that rely on microprocessors. So this is the monthly chart on semiconductor, Taiwan Semiconductor, and I believe that we do have room to the upside, roughly another $12 before resistance kicks in. Now, before we continue with the analysis, we're going to look at this article as it states, semiconductor stock you will regret not buying right now. They are talking about Taiwan. At the core of high-tech devices are semiconductor chips. These integral components may be small, but they do have a lot of heavy lifting, regardless of whether you are talking about GPUs used for AI, smartphones, self-driving cars, or other technology. Chances are it's made by Taiwan Semiconductor. As the name implies, Taiwan Semiconductor is based in Taiwan, so you have this big thing going on between the U.S. and China, and the U.S. is going to protect Taiwan again for their technology. What's the reason why the U.S. and the rest of the world don't want a Chinese takeover is largely centered around the importance of semiconductor, Taiwan that is. Apple's iPhones, NVIDIA's GPUs, and Tesla's electric vehicles all rely on its products, showing how critical it is to just a few of the top technology companies right now. Now you do have AMD pulling up from the rear, but they can't match Taiwan's power. Taiwan Semiconductor also has the best technology in the business, as its 3 nanometer chips are finally starting to generate revenue for the company. And think about this, I believe Intel only has the capabilities of going down to 7 nanometer, so that kind of tells you the difference. This next chip generation is more powerful and efficient than the 5 nanometer predecessor and demands a greater price. As companies adopt 3 nanometer chips, Taiwan Semiconductor's revenue will rise, boosting revenue as production ramps up. Alright, so here's why I particularly like Taiwan Semiconductor. From a valuation standpoint, they're trading at the low end of the range. Alright, so back in 2021, at the height of the market, the valuation from a P ratio was roughly 40-ish. The low, which hit in late 22, that was during the October lows on the stock market. We were sub 12, now we're at 17. Again, a lot of upside room from an evaluation standpoint. Its results haven't been that great lately, thanks to an oversupply of chips at its clients' facilities. Taiwan Semiconductor's revenue shrunk for 3 quarters in a row, and we've seen this with other companies. In particular, what comes to mind is Micro Technology and their flash memory. However, they mentioned that going into the end of the year and early next year, that inventory will become back to normal, and they should start seeing some demand for their products as well. Management is confident that growth will return in 2024, especially in the second half of the year. While they are unsure if they're at the bottom of the cycle right now, they know they are near the end. Alright, so kind of with that said, I do think that there is more room to the upside from an evaluation standpoint, but also from a fundamental standpoint and a business cycle standpoint. Now, if we scroll down to the weekly chart, price is and has been in a range roughly from the $80 level to, again, the 110 level. So within this range, you could have just gone with the trend or momentum on a lower time frame. And if we drill down to the daily chart, this box was coded blue because once upon a time this was a daily sell level. You had a drop in price, base in candles, then a drop, price pulls back, and then drops close to the daily buyers level at $81. price comes back up, hits the bottom of this zone, pulls away again. However, the next leg higher, we breach, close above, and now I can remove this box, and it's kind of off to the races from here. Now I can say that, let's see, it's not the greatest of daily buyers level. Nevertheless, it did work out. You had a rallying price, basing candle, and this gap is really a green extended range candle. And what happens when price comes back to that level, you get that reaction. So if price is going to go higher, we need to see a close above the $100 level, and I think we'll get that as soon as the end of the year. And from there, we're off to the races. We have price that needs to close this gap at roughly the 103 level. You have other gaps a bit higher at the 105 level, and then eventually I do anticipate price getting to that 110 level. Whether that happens in the first half of 2024 or the second half, the chart suggests price wants to go higher. Again, just from a technical standpoint, the yellow represents the 200-day moving average and the red represents the 50-day moving average, and we're about to have a golden cross that's very bullish for price, and I anticipate that happening in January. Let's target late December. So in late December, I anticipate we'll have a golden cross. Again, that's where the 50 crosses over and above the 200-day moving average. Again, that's going to signal and validate and confirm that we are in an uptrend. Again, $100, 103, 105, and then the 110 as targets. Thanks for watching. Subscribe. Please like the video.